This meeting is being recorded.
Oh, whose computer was that?
That was me.
That's you, okay. So, guys, welcome Brandon to this week's live episode about blockchain, Bitcoin, cryptocurrency. Brandon, to honor you, I wore my gold chain because Bitcoin is a store of value, or so they
Love
say
it.
it is. So
Love
I
it.
wore a little bit of gold and I put a little Bitcoin wallpaper in the background. Thanks for joining us today on a Sunday to do this. I got connected to you through Austin, and he said you know your stuff when it comes to blockchain and crypto, and we're like, man, we got to get this guy on. So thanks for being here.
You're welcome. And just to start off, proof of stake obviously means you need a 16-ounce New York steak to conduct the transaction. So I do know what I'm talking about.
Karin, did you get that?
Yeah, I did.
Okay.
I mean, I don't eat meat, but I understand it.
Yeah. I don't know if you did. What?
Tell me.
Okay.
In layman terms.
Huh?
Tell me in layman terms, and I'll tell you if I got it or not.
But it was a blockchain joke.
Okay.
We'll go into detail. We'll go into
Yeah.
So Brandon, just out of passion and interest, I've gone deep into Bitcoin. I've learned about proof of stake, proof of concept, the different types of blockchain. Karin's here because one, he's a great guy to be around. So that's the number one reason he's here. But number two, I wanted to have someone that isn't so into blockchain have a chance to learn about blockchain, but also ask questions that the common person would have. Because not everyone truly understands blockchain or crypto or Bitcoin and the economics around it and how it connects to society. So his role here is actually really important because my goal, my intention for this recording is one, to get people educated about Bitcoin, but to get Karin educated on Bitcoin.
Perfect.
If we could do that for Karin, we could do it for anyone.
I agree. No, it's a very sometimes the way it's explained, it could be a difficult thing to understand. And no, I think it's important for part of the ethos of this whole movement, I guess you want to call it that, is to get everyone on the same page of understanding and and benefit from it. So
Exactly.
I think
yeah, keep going, Karin.
Oh, please tell us. Share. Let's introduce Brandon first.
Yeah. So guys, welcome back to our next live. This one is purely about blockchain, Bitcoin, cryptocurrency. Guys, the reason we're doing this one, two reasons. One, we're trying to educate all my audience, my listeners, our listeners about blockchain. Should they invest? Should they look at it and try to understand the space? And the second reason we're doing this is to ask just really important questions around the technology, just so that we have a fundamental understanding of what it does and what problems it solves. So today we've got our guest Brandon, all the way from Los Angeles. How you doing?
Good.
Thanks
for having me.
No problem. Thanks for being on here. So Brandon, you've worked in the blockchain/crypto space for how many years?
We really got into it, I would say probably around 2018, 2019.
Okay.
Yeah, I mean, it might have even been, I think we bought our first Bitcoin probably 2017. And of course, when we started, we didn't really have any idea. I searched cryptocurrencies and I just looked up all these different things that were happening, and it was just like this whirlwind of information.
Right. Did you buy a full Bitcoin or like a partial?
Partial at the time.
Partial.
I think the price at the time was, it was just a test thing. I wasn't really looking to do anything. It was more so like, this was still in the time period where I think, when you're buying it, you were making sure that you were actually getting something in return. It wasn't like a scam or something.
Right.
Yeah. So it was fun, but it worked. And then, I kind of just kept going down the rabbit hole from there and learning more and more. And, I think the more I've learned, the more I've had the ability to let it sink in, the more these sort of complex ideas just became, I think, a lot simpler and more common sense when you think about it. So, I think that's really, anyone that I talk to about it, I always just try and break things down to a very common sense level, and technical stuff you can get into, in the next chapters of the curriculum, so to speak. But
For sure.
Yeah.
For sure. So I heard about Bitcoin when I was 16. My cousin, who had gone really far down the rabbit hole, he was a year older than me, but for whatever reason, he had gone down this rabbit hole about Bitcoin. At 16, he came to me one day and said, he's like, take $1,000 and buy this Bitcoin. And I didn't at the time, unfortunately, because I didn't have a job. I didn't have any money. And I was like, what is this Bitcoin thing? I just didn't understand it at that time. Now, had I invested $1,000 at that time, it was 10 cents a Bitcoin.
Oh, wow.
Maybe even a tenth of a cent, but it was really low, is my point. And then over the next, I don't know how long it's been, 15 plus years, Bitcoin's gone from that price point of 10 cents, 12 cents, whatever it was, to now, I think this past week it's trading at 44,000 USD. And so talk about missing a boat, right? Talk about missing an opportunity. Now, one of the main reasons I'm doing this, one, I'm really into finances, just business, income. I just like whatever it is. I just like the thrill of business. So one of the main reasons I'm doing this is I want to educate people about Bitcoin so that they can have their own position on whether or not something that they care to invest in or want to learn about. And then some of the other problems that crypto and blockchain might solve down the road. Okay. So let's start with the very first question, which is the number one question I get asked all the time, is what is blockchain? And then the second question, the follow-up, is what is Bitcoin? Explain that to us in like the simplest way possible.
So basically, blockchain is I think the best way I could start with this is by saying that it's kind of like when cloud databases came out in like 2010-ish. And, when you hear cloud database back then, you're like, is it like in a cloud literally? Like, is there a physical cloud of information floating around the place? And what the hell's going on with this? I think blockchain is somewhat in the same thing in terms of it's really just another type of database architecture that is, becoming more mainstream now. And there's different types of blockchains that, work different ways. Bitcoin is proof of work, ETH is proof of stake. Something like the XRP ledger, which is ran by a company called Ripple Labs, uses Byzantine consensus. So there's all these different ways of doing it. But basically, the way I think of a blockchain is like if you think of a literal chain, and each of those links on the chain is a transaction. We're basically just creating a big chain of links. Each of those things are transactions that are immutable. So it's a transparent, immutable record of transactions. And the way that each of these transactions are sort of locked in there, like I said, is different for each type of each brand of blockchain. But it's basically like when scientists, they go to the Antarctic or something like that, they pull out an ice core and they can look back and see like, hey, like this was the amount of oxygen in the atmosphere in this time period, whatever. I sort of look at blockchain as the same thing for financial transactions, where I can look back, we could pull out this ice core of transactions and be like, on this date, this time, these were the parties engaging in a transaction. And so, there's a lot of benefits when you can have an immutable record. And what's interesting is, the previous finance system and architecture of that, there wasn't the best transparency or record keeping at times. And so it's just interesting as we move towards this transparent database of transactions. Not everybody who is making money in all the cracks beforehand is on board with this. And so I think that's where the transition of society into this new financial architecture, you're going to have some people who aren't happy about it. You're going to have some people who are going to benefit, who are going to be super happy about it. And so I think it's an interesting situation where this paradigm doesn't just involve like, hey, it's a better technology, it's a faster technology, let's implement it. there's also a lot of political stuff, a lot of unwinding of traditional assets that have to occur to transition them into the new system. So that's a whole explanation of it. But
you know, what's funny about blockchain in general is that, and Bitcoin, is that the more you explain it, the more you have to keep kind of explaining it for it to make sense. And that's why whenever I talk about blockchain and Bitcoin, it's like you cannot summarize it quickly and succinctly enough for someone to understand in one sentence. And because every part of it needs to be explained to the common person for them to have a proper grasp of what this technology is, right? But yeah, I think I understood most of kind of what you said. Karn, are we good over there?
Sounds good to me.
Okay.
I mean, I have a different kind of analogy of how you're talking about blockchain, but the blockchain of actual links being created, that makes sense, and the transparency also I agree with. The way I thought about it was, if tree sap is actually just oozing out each transaction that's made, there's more tree sap that's coming through, and the transparency portion is that you can see through the tree sap all the way to the back of knowing everything.
It's a good analogy too.
Just the visually, it makes more sense than just having a bunch of links.
Right. Yeah.
A link of tree saps, or a link of tree sap.
Yeah, because
totally.
then the tree sap, if you think about Jurassic Park and how that mosquito was trapped in the tree sap over hundreds and hundreds of thousands of years or millions of years, whatever it was. So that's pretty much what it is. And I'm like, cool, man, it's just a bunch. And I'm like, we can actually zoom right through it and see
all the way through it.
Is this actually keeping people honest, the transparency of everything?
It's
a way to hide it.
Yeah. So what I've noticed, like, because transparency was one of the things that you mentioned. So like when people talk about Bitcoin, I think the initial thought is that it's not transparent.
That's how I first learned about it, is people from the criminal organization or criminal world were the ones that were using Bitcoin.
Yeah, I mean, and that, I think that kind of goes a layer deeper into understanding like the for instance, the technicalities of how the Bitcoin ledger works and the amount of energy that it takes to facilitate this network, you know. And when you get down to that, energy costing money, there's only certain places in the world that have cheap enough energy to run a network wide of, you know, Bitcoin mining necessary to keep up the network. And, you know, so then you start unwinding a little bit more. Well, where are those places? How are they making their money? What are they doing with it? You know, there is some interesting stuff when you go down that rabbit hole. But, you know, and there's a lot of other things too. We don't, you know, we could get into later on. But I mean, I remember when Bitcoin, when I first became aware of Bitcoin, it was this kind of like, you don't know who's transacting, this kind of anonymous payment network sort of thing, you know, for the dark web and things like that. And you know, I've seen recently to where they were actually able to reverse engineer this sort of anonymous payment network to actually see who was doing these things. It kind of reminds me of like when they said Snapchat, when they said like, oh, your snaps will delete and disappear, and then a few years later they came back to like, oh, actually there's a whole database of all these snaps. And so yeah, it is an interesting situation. I think where we are going to end up with this technology is going to be transparent and in the right place, doing the right things. I think like with any technology, you know, that we've experienced coming onto the scene in our lifetimes, you know, there's a little bit of I don't want to say a criminal or a dark web element, but there's a little bit of a non-regulated environment at the start of these things that will eventually sort of, you know, they'll come into regulation and become more stabilized for an actual like economy and society to be, you know, ran on top of.
For sure. Yeah, I think it's funny that you talk about that, because yeah, even when the internet first started, it was like dark web and all this whatever was going on the internet before it got legitimized and then became something that the common person could use. So I see the same kind of trends with blockchain. As initially it gets used for money laundering or you know, drugs or whatever transactions that can't be tracked. But as we kind of find the technology to work around it, it'll be really transparent, And again, the fact that everything's stored on the ledger will make it more transparent than our current fiat system, right? The way we currently
Totally.
run money. So I see the long-term benefits of blockchain. But yeah, I think it's a hard concept to grasp, because I think the average person doesn't have a proper grasp of just how technology in general works. Like when you talk about cloud storage, like I don't know how many people could actually explain how cloud storage works. Like it is such a fascinating thing, right? Like I have cloud storage from Apple. So in this case, Apple's got these servers that they're paying for, that when I upload information using the internet from my computer to my cloud, it's being stored in their cloud servers. That's like how simple cloud, well, it's simple, but it's not simple, but that's how cloud works. But explaining like cloud to my parents would be like, how does this work? It's like magic to them, right?
It is pretty magical when you think about it, you know what I mean?
It's so crazy. Okay. So where I was going with that idea is that, yeah, blockchain is run independent of servers, right? It's run like the tracking of this data is being tracked in the blockchain, which is not owned by any central company. Is that correct?
Yeah, so that's that. So some characteristics of a blockchain could be, I think two key phrases are decentralized and distributed. So decentralized means that there's not like a centralized person who's controlling these servers, these physical things that are storing the information, like you were mentioning Apple or something like that.
Right.
You know, like with Bitcoin, that was the whole idea, that you had these miners all across the world that would each be essentially hosting some of the data that was being transacted on the Bitcoin network, and they would have a whole, gamified way of determining, who contributed,
what information, right? What transactional information? Yeah. So just to like really simplify this, the way I've kind of grasped this idea is, let's say I have cloud storage from Apple, the iCloud. Now, the difference here is that Apple owns the iCloud, so they're a central authority around the iCloud. With Bitcoin, and correct me if I'm wrong, no one owns the actual server database, but the miners and the information is accessible using the internet, but no one owns the actual blockchain network. Is that correct?
That's correct.
Okay, so that's what makes it decentralized, that no one has central authority to say, I'm going to manipulate this blockchain network, because no one owns it. And it's so the part that there's two things that have always kind of got me a little bit stuck is the security aspect. I cannot explain the security aspect. So like, how secure is blockchain? That would be like the first question. And then the second question, so the second question is kind of connected to the security, is like the blockchain itself, if it is secure, what makes, let's say, Coinbase or Quadriga. I used to have this blockchain. I used to have Bitcoin in a website called Quadriga, and they went under, and I lost all my Bitcoin. So I didn't put it in cold storage. We'll talk about that a little bit later. But the blockchain might be secure, but there's no guarantee that Coinbase or some of these companies that access the blockchain, where people keep their actual crypto, is secure. Like, let's address that really quickly.
No, that's extremely important. I tell all my friends and family and everybody like that, I say, never keep any of your assets on the exchanges. Like, take it off, put it in even if it's a hot wallet, and we'll get into all that stuff, cold wallet, but don't keep it in the exchanges, because, I think with this whole environment, oftentimes the weakness isn't necessarily in the technology itself, but in the like we were talking about, like the political element or the human element of these things, or so for instance, Bitcoin network is technically secure, right? Where it becomes potentially not secure is if, one of the famous things people talk about is the 51% attack, right? Where if a group of miners who, because of their ability to access cheap energy, if they are providing more than 51% of the mining capacity for the network, they could technically take over the network and, without getting complicated, modify a bunch of things and kind of basically wreak havoc. So there's that element. For something like the exchanges, there's a lot of fine print in these user agreements that you sign on to that, let's be honest, I mean, that's more reading than I've done in my entire college career, for some of these things, is the fine print. And, a lot of the times, especially with, I think, recent things, like I'm sure some people have heard if they've been looking at the news, it's gotten a lot of publicity, is things like FTX and Binance, is, if those companies, it's in their agreements that if those companies go insolvent, that they have the right to use your assets that are on their network to sort of solve that liquidity issue for them. So if they're in debt, $100 million, and you have your assets, on the exchange wallet that they provide you don't take it off of there. You say you have $500,000, they could take that $500,000 and use it to settle their debt, and there's no legal recourse for you to do anything about it. So, and I think that all goes back to, we're in the early days and there's not a lot of regulation right now. And these things are, I think the technology is going to be used, like we said, over the course of time for the benefit of people. But I think right now it's sort of the Wild West, and these entities that are, I guess, the platforms used right now, do they have the best interests of the people in mind? It's, a lot of times up for debate.
Right. Yeah, we won't know until that shapes out. Okay, I think that was probably as much as I want to talk about blockchain without boring everyone to death, because it is such a dense topic, and it's one of those things where you kind of have to have that interest to actually want to go deep in how the technology works. So let's change it up. I know there's thousands of cryptos on the market, like cryptocurrencies, altcoins, right? They call them altcoins, alternate coins, because they're alternatives to Bitcoin, and some of them have different protocols and different, I guess, security protocols that they work under. But like, why is Bitcoin so special? And what's the problem that Bitcoin solves in our economy? Like let's talk about Bitcoin.
All right. So I think the way to think about Bitcoin is it's a new medium of value exchange, and it represents a whole new shift of being able to send value from one person to another person. It's the vessel that goes from A to B. I think a step back here, just 2 points of context would be, we've grown up in essentially a fractional reserve banking system. There's a whole definition and research you can put into that sort of paradigm. And then I think another bit of context is, and I've heard other people say this, is that, when the internet first started, it was the internet of sharing. It was all about being able to send you a web page and have you open it quickly, cheaply, and share information. And how I've heard people put it now is we're moving into the internet of value, which is just how easily information was shared. In that internet of sharing, value should be as quick and as easy to exchange as information was. And when you would traditionally, like when you go on the internet right now and you buy something, it takes 3 to 5 days sometimes to clear a transaction or something like that. And there's a host of things that is done with the money in that 3 to 5 days. And now, as we're going to the internet of value, and it's all about a medium of value exchange, being able to do that super quickly and directly without all these crazy middleman taxes or things like that, it's going to be extremely important. And I think us being in sort of first world situations and thinking about it from a peer-to-peer standpoint, I want to send you, Raul, some money right now, that's one way of doing it. And I think these sort of use cases, the value of them extrapolates more so when we're talking about, hey, you have a central bank in one country that wants to send money to another central bank in another country. There's it's crazy how the medium of exchange just changes that whole dynamic. I mean, that's the whole thing we get into, but in a sense, I would say it's a medium of value exchange. Bitcoin is.
Right. Cool. No, I think that makes sense. Karn, any questions or follow-ups?
I'm just thinking when we're taking the power away from the government with these central banks, how are they going to take advantage so they can continue making money off it as well?
Mm-hmm. Yeah, and so that's I mean, that's a great question. That's the, I think the logical, as you're thinking through this, like, well, obviously someone's going to be pissed if they're left out of this. And, you know, it's, we're going into a new system that's actually going to be backed by gold. And a lot of these cryptocurrencies are actually going to be um, digital versions representing the value of that gold. And so a lot of the central banks are actually, like, say you take a central bank in South America, like Venezuela or something like that, right? Like all these countries, they produce a lot of resources that's extremely valuable, and yet they still remain poor. And people are like, well, how are they still poor if they have all these resources that they're shipping out? And so to answer of why the central banks are going to be happy about this new transition of thing is because if they can, before, and I don't want to go into a whole detail thing, but long story short, if I was Venezuela and I wanted to send $1 million of stuff to the United States, I would have to have an additional $1 million in an escrow account called a nostro account on the side, in addition to my $1 million. And so, as those numbers, become larger numbers of value, I might have to borrow money to cover my escrow account from someone else, from two other people, from three other people.
Mm-hmm.
So, the value that I'm exchanging, like if I send $100 million as a central bank, instead of getting $100 million worth of value back, I'm getting taxed by three people potentially. And so I'm earning less on my return, basically. So with this,
hold on, you think that the banks will like crypto?
I think so. I think it's gonna open up new financial packages.
Yeah. I don't think they would, and I'll tell you why. So the reason why I don't think central banks would like crypto is because the way central banks solve problems is by printing money, and you can't print Bitcoin.
No, that's very true. That's very
like
true.
Their go-to to solve any problem is, oh, economy is underwater, let's print a bunch of, let's inflate the economy. But
Right.
now when you have an immutable currency like Bitcoin that you cannot just print more of, what do? You can't inflate the economy.
So I should take a step back. So I agree with that, right? I mean, I think that kind of goes to the whole, we're moving away from a fractional reserve banking system where you can just print infinite amounts, and we're going back to a gold-backed system. I think, and this kind of goes into the US dollar being the world reserve currency there for the last 100 or so years, is, I guess that's where I'm getting at, is that benefited very few people. And even people in like these, central banks from other countries, they probably weren't, they were getting shorted too on some of these things, even though they were a central bank, and that gets into the whole like Rothschild banking system and everything like that, but I think the ability for these banks to basically keep more money that their countries they represent produce, I think that's what's going to make them happy. Because in this new gold-backed system, these cryptocurrencies are going to basically act as as the reserve currency, and so they're not going to have to make all these deals to borrow money to cover money and put it in a escrow like they were before. They're basically just going to use the crypto coins from these networks to act as the escrow. There's actually one company that is leading the charge on this, and it's called Ripple Labs, and they're actually working with a bunch of central banks and banks in general. For instance, one of the people in Japan I think he might be their chief of finance, or I forget the exact title, but he was saying by 2025, every bank in Japan is going to be using XRP to facilitate transactions amongst each other. And so there is movement towards that. Now, I will say this, I agree in that there's going to be a lot of people from the fractional reserve banking system that aren't happy about this. And so you know, how the play-by-play goes to get from here to there. You know,
Right.
I don't know if I couldn't answer that one, but I
Yeah.
know that there are, you know, I think, and that would be a whole other episode is, you know, what are the new applications that are possible for people like central banks and things like that to utilize this technology. And I
Yeah.
think those are the questions that they should be asking.
Yeah, I think that's where the technology is going to be a big win, is the different technologies that come out of the blockchain space. So I think the use case will make a lot more sense. But yeah, my stance on central banks and crypto is I don't think they like crypto, only because currently the way they run an economy is they print and they raise interest rates. Like that's what the federal system can control to control the economy. But when you take that power away, they can't manipulate the economy.
Right.
And the argument is, should the economy be manipulated, or should we have an economy that's free from any manipulation?
I'll put it this way, like I've heard some crazy, now, I mean, these are rumors and, you know, people can do their own research on these, but I mean, you know, I've heard some crazy stuff to where they like, so they obviously wouldn't because they live off the fractional reserve banking, but I've heard stuff to where we're even going to get rid of the Federal Reserve. Sorry, the Fed Reserve.
Yeah, we'll see how things shape out. I think it's it could go a lot of different ways for sure, but it'll be interesting to see how it plays out. I think personally, I couldn't imagine a world where things aren't being controlled to some degree. And so, you know, maybe eliminating the Federal Reserve might be like a pretty sharp extreme. I see a world where more realistically it's both. Like we have the crypto world, which is the Bitcoins, the altcoins. It's another asset class in addition to fiat currency. I couldn't see an economy running without hiccups and without the wealth amassing into some odd percent.
Right.
Without some sort of government regulation that makes it more fair for other people. So I just can't see that happening in society. But yeah, the way I like, for me, really simply, like, because I know some of the people that watch this, like a lot of it's gonna be over their head. The way I would describe it, Bitcoin, is it's a way of communicating value. Okay, so currently the way we communicate value is through dollars. So when I have $1 and I go buy a product, all I'm telling the person is that I am willing to pay this amount for your product. Okay. The problem with currency is that it gets manipulated. When the economy suffers, the government can print the money, or they can raise interest rates, which pulls the money back. Okay. Bitcoin is this asset class that cannot be manipulated because there's a finite amount. There's 21 million, I think it is, Bitcoin. Some of it's probably lost. It's probably less than that now, but 21 million Bitcoin, you cannot make more of it. And so the advantage and the reason why it could stick around is the fact that it cannot be manipulated by anyone. Not yet, at least, right?
There is an interesting thing though about that, because a lot of times to buy the Bitcoin, you have to buy Tether, right? So like in the US, you have to exchange your US dollars for Tether, and then with the Tether, you would buy the Bitcoin. Kind of speaking to like what we were talking about earlier about a lot of these things, the weaknesses in the chain, so to speak, no pun intended, are in the human element of this whole thing, because what they were doing was, there's proof of this stuff too, is that they were actually, the owners of Tether were actually basically pulling the same fractional reserve stuff with the Tether. They were printing the Tether out of thin air, and then they were using that Tether that they didn't exchange $1 for, that they just printed, to buy the Bitcoin. And that's why you had a sharp increase in the Bitcoin price from like basically after 2020. It went from like 5,000 to 35 to 50,000 like in a matter of a few months. And it's because they were just printing all this Tether. And it was a crazy situation to where, and of course there's like, there's it draws the attention of different people, right? Like regulation agencies. The reason they didn't crack down on it was because with so many people invested and the artificial inflation, it would have created a huge liquidity crisis, basically, where if everyone would have cashed out at the same time, the amount of money to cover would have been like, there was like a huge multi-trillion-dollar short that would have occurred.
Yeah.
And that would have been an issue.
Yeah.
Was this all due to Tether?
Was it what?
Was it all due to Tether that the value of Bitcoin went up?
The majority of it was, and what's interesting is that the entire market cap for the whole crypto space right now is about $10 billion, like as far as like consumer buy-in.
Yep.
And just to show how early we are in the space, even now, is so if the market cap is still that low, quote unquote, I mean, we're dealing with trillions and quadrillions of dollars on a global scale here, but if it's still that low, you can definitely manipulate it with Tether, especially if you control the flow of the transaction that way, to where you have to exchange Tether for the Bitcoin. But just for reference, like Ripple Labs, the company who's working with all these banks to facilitate this technology, one of the applications they're focused on is cross-border payments, and that's projected to be $275 trillion by the year of 2027. And so just that one application is 275 trillion. And that would, if just that application brings that much value to the whole market cap space, compare that to the 10 billion where we're at right now. So there's a huge runway to go to. So yeah, the inflation issue though with Tether is very, very real.
Yeah. Yeah. So Tether, for the people that are watching that don't know what Tether is 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 it a finite amount of coin? It's just pegged to the dollar, right? It's supposed to be pegged to the dollar.
Allegedly, yeah. But again, the dollar is in itself an inflationary thing,
Yeah.
so
let me confirm. So Tether is like a blockchain, a crypto that is supposed to be stable because it's 1-to-1 with the US dollar.
Yep.
Right.
If the US dollar goes up in value, then Tether also goes up in value. If US dollar comes down in value, the Tether also comes down in value. So it's just tracking the US dollar. But what you're saying is happening was that the people that were in charge of Tether were leveraging. So you would have one US Tether, but they were lending out 10 times, right? That's what you're referring to. And then that was inflating the price of Bitcoin because 10 times the amount was buying this Bitcoin.
Pretty much what was happening, yeah.
Yeah, that's so crazy, eh? Okay, so here's what I've noticed about Bitcoin is that the price of Bitcoin always gets compared to the dollar. And that's a rough way of looking at Bitcoin, because if you compare let's say you have one Bitcoin, and people in their mind will think of 44,000 US dollars. But the problem is US dollars can be printed. So it's kind of a false comparison. I don't know if you guys know what I'm trying to explain here, but essentially, if you can print US dollars, although it might, in your mind, you might think, oh, my Bitcoin's worth more. In reality, the US dollar is actually worth less. I don't know if that makes sense.
I know what you're talking about, but Bitcoin can also be fractionalized, right? So it's not that it's that one Bitcoin, that's the only way you can transact it. Like one Bitcoin is 50,000 and you can't transact it in multiple ways. You still can marginalize this thing to use, like fractionalize or marginalize it to other means.
Yeah. So you can trade.
So that comparison, that comparison in the beginning might have worked, but now because of the valuation of 1-to-1 just doesn't make any sense. Now it's 1-to-1 to fractioning to like fractionize it.
Yeah.
Off. And what is that value?
Yeah, exactly. Yeah, it's really complex because we compare everything to the dollars. That's what we know and understand. But when you really stretch the thoughts out, it gets way more complex.
There was an idea that I shared with you last week.
Yeah. But
there was a guy that had Bitcoin and he spent 250 Bitcoin to purchase a property. It was like $1 million or $1.5 million. And in a couple of years, that property went to $2 million. So it appreciated by 500,000. But the amount of Bitcoin it costs for that property now is only 50. So the value in dollars went up, but the number of Bitcoins went down by 200. So it's like, what actually happened there?
Yeah. So do you want to explain that, Brandon?
Yeah, I mean, I think it all ties back to the, this sort of tether situation where it's like you create situations to where even if it is, what is causing the discrepancy of valuation, right, between a Bitcoin and a US dollar, if it started as, like a one-to-one kind of thing, or someone was, what was it, like the original story of Bitcoin was like someone paid like 12 Bitcoin for a pizza or something like this.
Not 12, it was like hundreds of Bitcoin or thousands of Bitcoin for.
That's a bad decision.
Yeah.
Yeah, so I mean, I think it's just interesting. I mean, part of it is, obviously, I think people seeing value in it and buying into it, and therefore adding more, basic supply and demand, because it is a fixed supply,
Yeah.
so the price does go up. But I think, the other part of it too is, somewhere along the way that, the tether situation happened and they were printing that, and,
Right.
and so I think that's where you have sort of these ratios that get out of whack, or that in a short period of time start to um, just create these ratios of
Yeah.
whatever.
Right. Yeah. But it's so hard to explain because I know what Karn's saying, and it's hard to explain because we see everything in dollars. That's how we were nurtured, right? We grew up in an
Mhm.
environment that was dollars. How many dollars is this? So when we talk about that property, Karn, you know how they sold it for whatever amount of Bitcoin, and in the
Yep.
future was worth less Bitcoin.
Yep.
So
It
the
just means that
question
Bitcoin valuation is up, but
exactly,
also the property of the
exactly.
valuation is up.
So the value of Bitcoin didn't go up. The value of the dollar just went down. You got to start wrapping your mind in that way, right?
I
The
know.
value of the Bitcoin didn't go up. It's just the dollar got inflated so much, the buying power of the dollar went down relative to Bitcoin. But
I
it's
know.
we look at Bitcoin from the lens of the US dollar. So
Yeah.
whenever we say what is the price of Bitcoin, we look at it from the lens of the US dollar.
And
But
we're
that's
only doing
false.
that because we're comparing the number of labor hours to the cost for the amount of earnings that we're going to get per hour, right? So if we're
Exactly.
making $10 an hour and we're going to make that for 5 years in a row, it's still 10 hours per number of like the quantity of, or $10 per hour, right?
Right.
And it's only going to incrementally increase versus inflation or deflation. That's not going to make sense to the common folk. They're just saying that we're going to continue working at this pace, and this is how it's being transacted to us.
Yeah.
Also,
So
you know what? I
if
want
you,
to comment about the pizza guys. Without pioneers like that spent thousands of dollars on a pizza, Bitcoin wouldn't be anywhere because you have to utilize it to actually increase the value, or I guess do like an exchange of something for more people to use it. Otherwise, if everybody has hoarded Bitcoin, does the value of Bitcoin actually go up? If we
Yeah,
all
I
just,
think
let's just say we sit on it, there's
so
miners.
again, the value of Bitcoin never goes up. The value of the dollar goes down. When viewed from the lens of Bitcoin,
Yes.
the value of the
Yes.
dollar is going down. So the value of Bitcoin is not going up. It's just we look at it
Here's
in
the thought.
dollars.
So if you just
It's hard.
Bitcoin,
It's a hard thing to wrap your mind around.
okay, so when we just
Property
Bitcoin,
values go up in dollars, right? When
yes,
you look at dollars.
yeah,
But if the dollar is losing buying power, if your dollar is worth less because of inflation, the property value actually didn't go up. Your dollars
okay,
just lost value. It's hard to wrap your mind around that.
right. So if people, so here's the thing: if the dollars or the value of money actually just decreases all the way, and Bitcoin is in charge, and we just continue hoarding it, is that pushing the value up or down?
For Bitcoin,
Yeah.
when viewed from the dollar, when you look at it from the dollar, the value of Bitcoin is not changing. The value of the dollar is going down. The power of the dollar is going down.
No, yeah.
It's so hard to wrap your mind around that because we look at
think,
everything from dollars,
yeah,
right?
that's especially true
Because
too
we
when
just keep printing money. If we
Mhm.
keep printing the money, your dollar today is worth less than it was 5 years ago. So it's not that Bitcoin went up in value. It's just that your dollar went down in value.
Let's say we don't use Bitcoin. Let's just say we hoard. Whoever has Bitcoin, we just continue hoarding it, right? We don't use it for anything other than just keeping it in our hot or cold wallets.
Mm-hmm.
The value of Does the value from the dollar that's going up or down change inflate or deflate the Bitcoin.
So independent of the Bitcoin, the value of the dollar is going down. Independent, like whether or not Bitcoin was in the picture, the value of dollar goes down.
That's true. It's going to
Right?
over time. Yes.
So the value of the dollar is already going down. So now if you have this asset class where there's only 21 million, naturally when compared to the dollar, it's going up in value.
Okay, so here's another
not actually going up. It's just staying the same, but the value of the dollar is going down.
We talk about removing the dollar. And
am I making sense, Brandon? Am I making any sense here?
No, totally. And I think this is getting into another conversation about speculation versus utility. I think, and that's a big one.
Okay, here's another thing. So we talked about gold. We talked about removing the dollar and just having gold, right? The value of gold, what does that go up and down as well? And then Bitcoin is just going to be stationary based on what the value of gold up or down is? Because we can't print more gold. We can't bring more gold.
We can mine more gold.
We can mine more gold. We can mine it, but then that takes effort. It's just not printing overnight. There's amount of time it takes to bring more gold in. Now we have gold in comparison to Bitcoin. Does that mean it becomes 1-to-1? Let's just move dollars out of it. Let's move actual physical gold versus
considering
binary crypto.
Yeah, considering that there's if hypothetically there's a finite amount of gold, like you cannot mine any more of it, like there's a limited amount, then and people say it's a valuable asset and it's used in machinery and whatever, then the value of gold will go up when compared to the dollar.
No, okay. And now what does it do to Bitcoin? Does it also push the value of Bitcoin up?
Are you saying that if the economy is run with gold as a backbone?
Yes.
If the economy is run with gold as the backbone of society, the value of Bitcoin does not change because you're viewing
1-to-1. So now there's no more.
Yes, yeah, it's a closer relationship than I would say the dollar for sure. So the value of gold goes up and the value of Bitcoin goes up because, again, the finiteness, right? The fact that it's limited. What I really think is more interesting is in the future, maybe money is not even a necessity in society.
So we're going to go back to bartering?
We're just going to be so abundant that it won't matter. Because what is the purpose of money? Is to have food and to have energy.
It's for trading.
Power.
You're trading dollars for something.
Yeah, but really what is the necessity of life? Is energy to be warm and whatnot, to make energy to make clothes, and then energy to farm, to have food. Those are like survival, right? So now if we solve the energy problem, I think you solve all problems in society, right? If you had more than enough energy, no one needs to work. Machines can do that. And if you have enough energy, we can farm infinite amount of food because we have enough energy. So I think the backbone of society is not Bitcoin, it's not dollar, it's not gold, it's just energy.
I think that, like, kind of going back to the start of the conversation, when when people bring up something like Bitcoin or any sort of blockchain type thing, and a lot of the mumbo jumbo about what it means for finance, I think Raul, what you just said is really spot on in terms of I think it's hard for any of us to comprehend what the day-to-day human value is or the difference is, because if it does create this more transparent, more abundant world, none of us have ever, I mean, at least speaking for myself, we've all been a product of this fractional reserve banking society. And I think what it looks like when it's not that, and if we go back to a gold-backed system, and whether the mediums of exchange in a gold-backed system are Bitcoin or Ethereum or XRP or any one of those things, I think, it creates a whole new way of living that I don't know too many people on Earth have experienced. And I think that's one of the things where, it's hard. That's really hard to wrap your head around in terms of.
It's so hard.
Like in terms of, wait, like everything is abundant and free now, no stress. Like what?
Dude,
like
I know. So Karan, like just think about it. Like, why do you work? To pay for food and to have nice things.
Okay.
But like in basic sense, survival is why you do anything, right?
Yeah.
So, and survival comes from the cost of energy. Now, what's really cool is that we have abundant energy. We just haven't figured out how to harvest the energy, which is sunlight. Sunlight makes more than enough energy that we would need to live.
Yep.
So yeah, if you play out the energy thing long enough, it's just an abundant future where we don't need to do anything. We just do things because we want to.
Hey, Brandon, so I've got a question. Should we
Mhm.
be trading our dollars for cryptocurrency, Bitcoin in general?
Me personally, the one that I put a lot of my money into is XRP. And the reason I do XRP is, you know, just based on the utility that I know that coin is going to be used for, like the value, um, the applications that XRP is going to be used for, there's certain value associated with those applications, like for instance, cross-border payments and things like this. And some of these things have already been sort of been tested behind the scenes, contractually um, worked on to this point. And so I would invest money in XRP personally, just because those are use cases that I understand. Having said that, I think that no matter what brand of coin you buy, whether it's like I said, Bitcoin, Ethereum, XRP, any of the altcoins out there, there's even another class of coins called that are part of this regulatory thing called ISO 222, and that's like you have Stellar, which is XLM, you got IOTA, you got Hashgraph. There's a few of them. I think it all comes down to just doing the research and understanding what the utility is that those things are going to provide and the value of that application. I think it's all about utility versus speculation. Just like, just like with any regular stock, right? Is, if you're investing in a company, you're trying to buy some stock, you're probably going to be aware of, like, if you're buying Apple, like, oh, I expect the stock to go up because they're producing a new product coming out this holiday season. I anticipate more sales. Therefore, I anticipate the appreciation of the stock that I'm buying. The all these coins are pretty much the same thing. It's like the value you're hoping is going to appreciate. That's why you would buy it. So like I want to buy it low and have it appreciate to where I can make more off of this. The way it's going to do that is through the utility applications that it's facilitating. And so I think with anything, I would have anybody, and I tell everybody I know this too, is like just do some research as to like take away the hype. Just what is the utility? What are the applications that this coin is going to be used for in the next year, 2 years, 5 years, 10 years, and just have an understanding of that, and let that be a sort of you know a reality check for what should I buy in terms of crypto coins.
Yeah,
So actually, I got a thought. I want to add to it. It has to do
Ripple's
with
known as the
NFT. So
non-crypto
what
of
ended up
crypto.
happening with a lot of these companies is they inflated so much, and you had all these celebrities buying into NFTs, and now a lot of these NFTs are worth zero. And Cristiano Ronaldo, him and his company, I guess, are being sued for $700 or $800 million.
Right.
What happened with that NFT?
I think
They had certain usages as well. They look like people. Yeah.
it's a complex situation. I think, and there's a few NFT projects that we were involved in, and that was one of the big things that we always would preach, because we saw some early signs of these kind of things happening, and we were like, to cover our own backs and the people who we were networking with, just to cover everyone's backs, was like, we always were like, this thing has to have some utility here. It has to have some utility value. It can't just be I'm buying a picture or something because I think in 10 years this is going to be worth something, based on just pure speculation, or it's a cool picture. And I think that, like, a JPEG captured in a new database format is going to be worth something. So I think the reason that you would see, like, even the guy Beeple, who sold like that dot for like 50 or $60 million, I mean, the common sense part of me says, like, what is going on behind the scenes as to why that is being hyped and marketed up, um, and I think we're starting to see a lot of that now, to where things. And keep in mind, if there was, think about this too, if there was something shady going on with these purchases, right, that means that there is a investigation going on. If it's an ongoing investigation, they can't release any information about that investigation. And so I think now we're starting to see a lot of these things come to the light. I think what we're actually witnessing is the controlled disclosure of these investigations that were taking place during that time, and a lot of fraud, a lot of money laundering, I think is the two obvious things. Yeah, I think those are kind of, to me, I chalk it up as like, a lot of the hype was to normalize these things so as to kind of like not draw attention to like, oh, this is unusual that someone's spending $60 million for a dot,
Yeah.
But that's why, again, like like as far as utility, I look at certain coins, whether it's coins being used for cross-border payments, coins that are potentially going to be used to conduct real estate transactions or things like that. I think those are things that are, once regulation happens, those kinds of things will be in the clear, just because those are straight up business type things.
For sure, yeah. I was saying earlier when Carter was speaking, but I said XRP Ripple is like the anti-crypto of crypto.
There's a lot
it's like the non-crypto of crypto. It's known
there's
as
a lot. There's a lot of discussion about a lot of headlines put out XRP Ledger. It's centralized. It's not decentralized. It's this. It's that. I mean, there's actually been a few arguments that have sort of, and it's very technical, and that's why it's difficult to stay with it. But that actually prove that it is actually very decentralized, and there actually are a lot of benefits to the algorithm and just all the stuff that goes with it. And I think it kind of goes too. It's almost like you have to look at it when you look at XRP. It's almost like you have to look at it kind of like we were just talking about, where it's the way that works out to be an actual crypto as people want the ethos of crypto to be is, you also have to assume too that as we go back into this new gold-backed system, which is why we're seeing things like BRICS nations right now with Brazil, Russia, India, China. I think South Africa is one of them. There's a few others. It's bigger than the G7. Is because we are going back to that gold-backed system. I think that's one way that, if that is happening and XRP is a decentralized thing and it's being used by these people, it's not for like a malicious reason. It's just the quickest, cheapest way to do these transactions. Now, having said that, there's going to be a mix of, like you seen BlackRock open up a Bitcoin ETF the other week or whatever. So they're all going to, they're all going to be, there's going to be a bunch of winners, I think. And I think the bigger part is just, a lot of people are still on the fence. Like, is cryptocurrency and digital assets, is that the future? Is it not the future? It's going to be the future. Like, I think that ship has already sailed.
Yeah, I think
buy
it's
Bitcoin and cryptocurrency just for the sake of owning it and just holding on to it, if we're not going to learn the utility or the usage of it.
Are you asking a question? Sorry.
Yeah. So are we doing that?
I'll tell you. I want to follow up the thoughts on XRP, but then I'll answer your question if that's okay. XRP and Ripple Labs, from my research, are different companies. So Ripple Labs is the company that does the cross-border payment. XRP is the token they use to do the cross-border payment.
Exactly.
Now, I would argue that when you do a cross-border payment, the currency cannot be volatile. So let's say if I traded you, if I was moving your money to your other bank in a different country using the XRP token, it needs to be instant, because if the price fluctuated, why would I use your service? If it went down, why would I use your service? If it went up, sure, it helps me. But you do that 10 times and it's a 50-50 winner loser. So I would argue that the XRP token is it solves the cross-border payment problem, which is a benefit to Ripple, but I don't see the benefit to XRP as a token and an asset to hold. Okay, so you can counteract that if you want.
Just like a quick context. So like in this new gold-backed, so from what I've seen is like in this new gold-backed economy, we're like, a lot of this inflation is almost like a controlled demolition of the old system, like, for details aside. And it's all going to trigger to where there's going to be this huge debt crisis, right? And we have to do a revaluation of metals like gold and things like this to sort of cover the debt, so to speak. And so when they revalue the gold to whatever it needs to be to conduct global economy, the XRP is going to be essentially the selected behind the scenes network or coin to be associated with that value of gold. And so when these banks are,
why XRP?
there's a lot, like for instance, the former treasurer of the United States, Rosie Rios, she's on the board for Ripple Labs and everything like that. And I think a lot of it too has to deal with, like for instance, the CTO of Ripple, David Schwartz. There's a lot of, he wrote a patent back in 1988 about distributed ledgers, and then that same year, The Economist comes out with a cover, the new world currency, reserve currency, and then it comes out a few years later. And he also worked for the NSA and stuff like that too. And then a lot of there was a whole thing too about how him, a guy named Arthur Brito, and Jed McCaleb came together to, build OpenCoin, which evolved into XRP in part. XLM, it split off, but there's a lot of talk where that group is actually who's quote unquote Satoshi Nakamoto. So, and I just take a step back and I look at it, I'm like, well, if this, it would probably take 20 to 30 years to implement this sort of like new finance system behind the scenes.
Yeah, but I still haven't understood why XRP.
Why they chose XRP?
No. Why would XRP be the backing of the global economy? Why
I would
that?
say it's faster. It's more transactions per second.
Faster makes it more of a currency, but it doesn't make it more of a reserve currency. So reserve currency speed doesn't matter because you're not trying to trade it. Right? Currency, like what makes US dollar good for a currency is I can trade quickly. Gold was cumbersome to trade. That's why it became the backbone of the economy, right? So that I think I see more Bitcoin being the global reserve currency, and XRP could be a version of a daily currency that you trade. But I don't see XRP being the reserve currency for that reason.
Got it.
And then the decentralized argument with XRP, that's a tough one because XRP Ripple Labs does control the escrow and the release of XRP.
Their own bit of it.
Yeah.
Like you said, they don't control the XRP ledger.
They don't control the ledger, but they can flood the market with the XRP token, which again, I think they're good companies. So I don't think they're going to do that, but it's the opposite of being decentralized.
Right.
If I can go print US dollar, it's no longer decentralized because I control the value of the dollar.
Well, they can't print any more XRP either. So I mean, there's a fixed amount of it. I think there's like 100 billion tokens or something like that. But yeah, I mean, and Ripple Labs is, they've already been making software for all these banks for some time now. So for them, utilizing XRP Ledger and XRP is really just an upsell for already existing sales pipelines.
Yeah, I see XRP as a currency, not as a reserve currency of the world. And then Bitcoin I would see as a reserve currency of the world.
Right. Although the thing with Bitcoin is that it is like the amount of energy to run that thing is like, it's a lot of energy. And there's also a lot of things too. So I mean, and there's also the one other thing with the XRP ledger is that they've also put some work towards quantum encryption. So
yeah, it is possible if the security of Bitcoin gets threatened by quantum computing, then yeah, I could see a transition over to Ripple, which if it's a protocol that you're constantly improving, then yeah, it has that. But it isn't completely decentralized as. But anyways, those are just my thoughts on XRP. But Karan, you asked a question. What was your question again?
No, if we were to hold like any of these cryptocurrencies, because we keep talking about the future of, and the regular folks like me, we're just looking to trade dollars for hours anyways, right? But if we were to trade our dollars for cryptocurrency and not use it and learn about it and eventually find some usage for it, you mentioned XRP would be the one. But
for me anyway, for me.
Yeah. But why is it that Bitcoin is the one that's kind of dominating charts across the board? Why Bitcoin and not these other ones? Why don't we hear about all these other ones?
I think sometimes it's an interesting, why does anything get press on TV? I think why does anything get promoted? most times it's not because it's actually better or anything like that. That's a good question. I mean,
No, I get it. It's probably just marketing then.
it is
But
a lot of
there is
marketing.
no marketer for Bitcoin.
No, but there are like people like us. We're talking about it. You have a Bitcoin
Yeah.
symbol right behind you.
I think the market, it just takes, the market cap takes all, right? Again, it solves the real utility problem is reserve currency, global reserve currency. It solves that problem the best. It's been around the longest. And then right now, I would say right now it's probably growing because of network effects. The most amount of people have Bitcoin and therefore it's the most talked about. So yeah, no actual marketing, but yeah, word of mouth marketing.
It's still marketing. I can see it on the back of your logo. That's marketing.
I'm marketing it.
I know, but something is happening. Why it keep coming
You know
up?
the funny thing? You want to know the funny thing? I actually own no Bitcoin. I own none of it. So but I would consider Bitcoin as a one-off lifeline. That's how I would invest in Bitcoin. I'd say, okay, put in whatever 5% of your portfolio, accumulate during the dips over time. But in the off chance the Bitcoin scenario plays out where it actually becomes a global reserve currency, it's your lifeline. But outside of that, meh. That's how I would invest in Bitcoin.
Yeah.
I'm also not a pioneer of the technology, so I would have different kind of an approach to Bitcoin or crypto than someone that's actually pushing technology around blockchain, right? So I do see a lot of use cases around blockchain. Brandon, I want to let you finish your thought and then we'll move into use cases for blockchain.
Yeah, I mean, just, as far as utility goes, and, one of the other things that kind of is an issue with Bitcoin is that you can't build decentralized applications on the ledger. So it's pretty much just a store of value and that's it.
Exactly.
There's no utility generation really.
Exactly. Yeah, I would say Bitcoin's not the software. It's not trying to solve any other problems other than a global reserve currency for the world. That's it.
So,
but yeah, I mean, utilities. Yeah. We could talk about utility.
There's a lot to get into. I mean, and just for instance, like just whatever is said about Ripple and XRP. I mean, the fact is that is the coin that is being used for cross-border payments, which is a $275 trillion thing, and so the nature of that application that is taking over, and like the reevaluation of the gold will take place, because the way that they're doing away with Vostro accounts, and XRP is already contractually obligated to act as that. So therefore, how I look at it is that, well, if XRP is this escrow between the banks, and this is a $275 trillion thing, even for a split second, the total sum of XRP has to be at least equal to the amount being transacted to act as an escrow. So therefore, it's literally, if it's solving a $275 trillion, issue, the value of XRP for even a split second, the total value has to be worth that much. And so, you take that, your amount that you own divided by that value, that's going to be the price per coin. And so I think that a lot of the reason why it's like, well, why is XRP still at the price it's at if it's doing that? It's because it's not going to be that price until the banks officially say, okay, we're using this now to do the cross-border payments, which they're not really publicly doing right now. But the framework is moving in that direction right now, and that's, like their board is stacked, like, a couple of former U.S. treasurers, people at BlackRock. They have a guy who's the CEO, or he was like the head of DTCC, which is all the what do you call it, derivatives and everything like that, which is like a $250 market annually. So I mean, there is some, and you have banks coming out and they're signing up new banks daily. So I mean, there is a lot there, and there's also stuff too, to where I always keep in mind that, like, if we are transitioning over a finance system, that probably does involve some sort of like military planning, along with like ongoing criminal investigations of fraud and laundering and these other things too that can't be publicly disclosed. And so, Raul, like you were saying, I hedge my bet and I say, hey, like, this isn't the end all be all for me, but I've seen enough here to where, in what I understand, I could make an educated bet with, a small portion of my, available income to put in this thing.
Yeah, I agree.
definitely wouldn't lease put the house on it and like not eat because of it. But I think that's the best strategy though, is like, because this whole market right now, especially before regulation, is so volatile. I think it's really just like, have a algorithmic way to buy the dips and accumulate over time where you're not, stressing your system.
Mm-hmm. Yeah. Yeah, exactly. Exactly. So, Karan, any thoughts on that? And then we could talk a little bit about utility.
No, let's talk about usage.
Yeah, so I know a use case that in my mind makes sense. I'm not a entrepreneur around the space and pioneer of this technology, but like if I think about it, it's the one that I think blockchain can solve right away. So the one that comes to mind is text, WhatsApp messages, Snapchat, any communication. Like right now, if I was to send Karan a message on WhatsApp, as much as I'd like to believe that message is private, it's not private, because WhatsApp, which is owned by Facebook, has access and they're the mediators. I'm sure they have some protocol and copyright laws and whatever to protect my privacy. So they're like, yeah, your messages are totally encrypted and private. They don't see it. Sure, I got to take their word for it. But that's where I see blockchain solving that problem, where blockchain could allow peer-to-peer communication of information. So I can actually send Karan a message without any mediators. And that's a use case that has become very clear for me right away. Right. So that's the use case that I see. But I'm curious, Brandon, because this is your wheelhouse. What are some of the use cases that you see? What's the use case that you're working on? Talk to us.
Right. Yeah, no, it's definitely interesting. And so with the use case like that, that's where a lot of improvements need to take place, especially with things like Ethereum and stuff like that. Because if you were to send a picture, are you going to pay X amount in gas fees, wait an hour? And that kind of goes back to the whole, value needs to move like information did with the internet of sharing. It needs to be instantaneous, quick. Because, right now, the way I look at Ethereum as a metaphor, just going on to Ethereum for a second, from just a pure technical perspective, political and all that stuff aside, is it's like paying $20 and waiting an hour to download a web page. The internet would have never taken off if I had to pay $20 and wait an hour to download a web page. So I think, for applications such as, social messaging and things like that, I think that's where it comes down to just less of a speculation, more of like, let me just look at the specs of this database. What's the throughput of this thing? What's the cost of running this database? What's the, those sorts of things. And so part of the reason why we got into this whole why we started digging deeper into the blockchain space beyond just like, oh, let me hopefully make some money with buying some Bitcoin, was we were looking to so we have a spatial communication system, and that might be like a big phrase, whatever, but it's sort of like, I guess the closest analogy that I could think of that people might understand that has some news publication already is Internet of Things. And so it's sort of like we want to combine Internet of Value and Internet of Things together. And in my head, because our communication system does a lot of things, it connects a lot of things. It's like beyond 5G basically. And so the concept was, well, how can I, Raul, similar to what you were saying with these messages, create like a transparent, peer-to-peer network of transacting information with each other. How can we do the same thing if now it's just environment messages? So all these sensors and all these cars and all these things are talking to each other and to the server. How can we just like basically create an immutable record of all the environment communications that are taking place right now? Like what blockchain out there could support that? Number one, the number of things that are communicating and the frequency that they're communicating, while considering, the cost and the energy implications of, hosting something like that. And so that's where we started going into just the rabbit hole of like, all right, well, Bitcoin, is probably not going to be that, just because, well, there's no decentralized applications that utilize it. And the cost and the time is just not, it doesn't make sense for these sort of spatial communication applications, where you want, like for instance, our system is able to communicate with say like a sensor in the field 1,000 times a second. And so I was like, if I want this blockchain to be able to capture like each of those thousand things a second, is there anything even possible out there that could do that? Or, are we just going to be limited to, capturing a communication from the sensor to the server once every 10 seconds? Or what does that look like, right? I was just these thought experiments in my head. And so basically, one of the best ones we got to was actually the XRP ledger. And that's how we sort of stumbled into that whole, ecosystem of thought. And there's actually I guess a complementary technology that works with the XRP ledger called Interledger. And the guy who did Interledger is this guy, Stephen Thomas. He used to work actually for Ripple Labs. I think he was actually their CTO for a minute. And he has like this whole tweet that he put out where he's like, if you combine the two, we can actually handle up to 1 trillion transactions per second. And that was like straight up just financial transactions. But I kind of, with our use case in mind, I interpreted that to like where it's like, okay, well, that could be capturing 1 trillion different environment sensors and objects out here communicating or whatever. So there's, they're not thinking about it in that way right now either. They're just pure finance. So there was still like some, work to be done on our end to kind of convert the XRP ledger to fit with this environment application use case. But yeah, so I mean, like that's sort of I guess like the big grand application that we're sort of like concept that we're working towards is, how can we apply blockchain to environment activity?
Mm-hmm. That's complex.
Yeah. Yeah.
Like, how do you where do you even start if you're trying to build that, right? It's insane.
I think what we're working on right now is we have a few areas that we're starting to deploy our antenna network. It's an antenna network and things like that. And just work on, before we get to 1 trillion transactions and this whole world of everything, like let's just, do something super simple with blockchain and environment behavior or activity, basically. Let's just record, how many people walked through this specific area and clicked a button or something like that, things like that.
Mm-hmm.
And I think a good analogy would be like if you were to combine Pokemon Go with blockchain, just recording user data and also facilitating transactions, for in-app goods and things like that. And that's sort of like what we're focused on, just keeping it super simple and, building out the complexity from there.
Right. Yeah.
Where I think that would, okay.
Yeah, I was just gonna say, what other use cases do you see? Because I think you've been around the space, between Karn and I, like you're all in this space. So, what other use case do you see for blockchain technology in general?
So I think for it to really go, I think that's where something like Ethereum did well, is with the idea of smart contracts and being able to sort of program, basically logic to these transactions. So I think, transportation is going to be a big one. Manufacturing is a huge one. Healthcare is a huge one. I think what's interesting too is one of the things that we've been working on is creating smart contracts that not only act in silo by themselves, but that can work with each other to, so this smart contract feeds information to this smart contract because, us working in the spatial sort of environment paradigm, unlike the internet where these web pages didn't share the same physical space, a lot of these spatial applications are going to be sharing the same physical space. So if we're doing a transportation smart car application and you mix that with the Pokemon Go thing, a very simple example is like the Pokemon Go thing has to know not to put an augmented reality character in the middle of a crosswalk while the car is coming down the road. And, we need to make sure that the smart contracts like can talk to each other so that they make sure that doesn't happen. And we can record the entire logic of this whole back and forth on a blockchain so that if there ever did come time to have some sort of insurance litigation, we could be like, no, the system clearly says that this is what happened. This was communicated. This didn't happen. This wasn't communicated, whatever, which I think actually looking at it, I think the one of the biggest crazy implications to me is how blockchain affects the insurance industry, because I think a lot of the insurance industry is based on, the unknown, or the lack of predictability. And I think the more that we can, have transparency, I think that's going to lead to an increase in predictability. And I know insurance industry is pretty big, and so like that's like an interesting uh, industry that I always wonder about, like from that.
Data, like more data to make proper decisions, right?
Right.
I see that a lot with AI, and like knowing, like, for example, if I buy a Tesla and I'm a terrible driver, the Tesla will be able to have that data. It would know my tendencies, my habits, and that data to how much of a risk I am to an insurance company will help them underwrite a policy that's more accurate based on my specific driving, right?
Right. And there's also the downside of that too, which I think, is and I think this is almost like one of the perhaps the most important question is, leveraging blockchain for these world of applications is, I think user data management with the blockchain is going to be key. And it's going to get to a point too to where probably
Automated.
the same way you have like these bots doing stock trading for these large firms, you're going to have some sort of like bots doing your sort of data trading. Who has access to what, when and where, who, what, when, where, why, how. Basically just, and I think that's where quantum computers, not to get too far off the deep end here, but I think that's where quantum computers increase the performance, decrease the power output needed to produce that result is going to be key, because with the current database infrastructure we have, like it's just not going to be, I think, really efficient or possible to do that at scale.
100%. Yeah, NVIDIA's got to make some more of these new chips.
You got to figure it out. Yeah.
Yeah, it's crazy. The data world is so like, it's so crazy.
Yeah.
I think everything with software, data, like information, it's like, it's not material, like you don't see it, but it's happening. It's
Right.
It's such a wild industry. Such a wild industry. Karan, anything you want to add on there? It's getting really dense towards the end.
It is. It is.
This podcast is going to be, or this recording is going to be so dense that like, I know people are going to tune in and be like, this is just going over my head.
Like
But
I'm writing down a bunch of terms, and I've got some homework to do, because next time, if like Brandon, next time we have you on, I want to be able to actually like have a better conversation. Because my thing, honestly speaking, whenever I think about any business or any type of new case scenario that we're doing now, is how do we use this thing to make $1 million, and then 10 million, and then 100 million? Naturally, that's where my brain's gonna go, because I'm a business owner. So I'm just thinking, cool, we have all these things. Now we can't just like buy this currency and keep it in the bank. We have to do something with it to increase its value. Right? Are we getting other people involved? Are we trying to, like you said, we need to solve some sort of problem to get paid out for it. So how do we make $1 million? That's what's going through my brain.
And I think that's where the smart contracts are essential, because that's where you basically build the application logic, the business logic, basically, for using these these ledgers and their coins as mediums of value exchange. Is what applications can you build around value exchange, basically. And that's why I just, to me, it was like for instance, the cross-border payments was like a well-defined use case already that people were already working on. You think about the NFT kind of art phase there wasn't really a lot of there was a lot of speculation. And I mean, we did some NFT projects, but like I said, in the ones that we did, we at least tried to do some sort of utility where it's like, hey, you buy this, and how can we maybe associate this NFT that you bought with a dollar value of some sort of local deal or something like that. The problem there though was again, because this is such a new space, you go into a business, like say you go to a bar or something like that, to them, it's like, why do I have to, number one, sign up and do all this stuff, get a crypto wallet, do all these things, have my users sign up, have them get a crypto wallet, and then they have to go through the whole process of setting that up, all to just get like, $10 off a drink that I could just, use traditional means to give them that discount. And it was tough to give them an answer because you're like, yeah, I don't know why. Like, I
Yeah.
would, if I were you, I would just give them the $10 too. So I think there's a little bit of I think that's one thing that Bitcoin has done really well for a lot of things is start to create these spaces for conversations. And I think uh, financial intelligence, like I didn't grow up with, people telling me about how the banking system works or just like these financial intelligence sort of like discussions. And I think the fact that, you know, now when I get together with friends who aren't even necessarily in the tech space, like we're at some point in time talking about this thing. I mean, maybe we're getting older, but I also think that, you know, rather than talking about, oh, did you see the NFL game this week? And we're talking about, at least we're talking about these things in parallel to that. And I think um, it's good because, we're like these conversations are where a lot of the utility value is going to come from. And I think the more that we can get comfortable with it, it's going to lead to, you know, how do we the $1 million profit, the $10 million profit, because I think those things are going to be there. And I would just say that like I think that we're still so early in this space, just given the fact that like you ask 10 people on the street, hey, do you have a crypto wallet, or do you know how to set up a crypto wallet? You're going to get such varied answers from maybe the two who even understand it. The other eight don't even have a crypto wallet. Um, I still think there's a huge opportunity. So I would say like for everyone who's like interested in this stuff that, not to feel that like the train has left the station and that it's like, well, why would I waste my time in it? It's already kind of happened. I think, the real revenue making opportunity for this whole space is going to, I would say, be within the next 5 years.
Hmm.
I say we still have about to really hit like that thing to where it's like, oh, I bought Amazon stock for like super cheap. I think we still have 5 years to really educate and move on that sort of opportunity.
Here's another thing. We're always going to have problems to solve. So
Mm,
it actually doesn't matter when we get in. I think it's just we just got to find we got to find some sort of usage to solve a problem.
mhm.
Am I wrong for saying that?
No, no, no. I mean, I think that's the whole point of utility is, because that's based in, that grounds the technology to where it's like you guys were saying, it goes back to, labor for time and all that kind of thing. And at the end of the day, it's just another way of exchanging value for labor and goods and services.
Hmm. Yeah, makes sense. Rahul, we taking this thing home? Bring it home.
Yeah, let's bring it home. This is the dense one. Oh my god. I almost started screaming at the mic.
Yeah.
No, it's
No,
good, man. It's good. I think it's important that we did this. We might find the 5-10% of my audience, again, my audience is not massive anyways, but the 5-10% that might tune in, maybe they buy Bitcoin, maybe they don't, maybe they buy XRP, maybe they don't. It's not financial advice by any means, but it's to get the conversation started.
totally.
I think as spaces and industries change, it doesn't hurt to understand the space out of interest. Like it's all just at the end of the day, guys, like it's out of interest. Like we're like, oh, we're curious how this technology works and how it's going to shape the world. And if you're lucky and fortunate enough that you have the desire to want to change the world, then you should definitely be looking because technologies like this have the potential to. So my closing remarks, let's just do a round of closing remarks and then I'll just wrap it up. So my closing remarks are whether or not Bitcoin or any cryptocurrency ends up replacing the dollar or not, it doesn't hurt to understand the technology and make your own opinion on it. Again, none of this is financial advice. It's more to get the conversation started and maybe help you fill in some gaps. And then for the 1 or 2 people that watch and listen to this, hopefully this video inspires you to go down the rabbit hole that I've gone down, that Brandon's gone down, at that I'm forcing Carnbeer to go down. So if it does that, then mission accomplished. You two, closing remarks?
I'll go first, then Brandon, you wrap it up, man. You take it home. You bring it back home.
Yeah, we'll go home, guys.
For me, what I understand is there's always going to be problems to solve. You just have to find out what problem it is that you can go out and put a process together to solve, right? Because if we're going to actually help people, then we got to find the problems that are going to help the environment and not just self-serving purposes. So when I do make that comment for $1 million, it's not the $1 million that I'm looking for. I'm looking for that number is large enough. So there's a problem large enough for that $1 million. So what is that problem that we're solving for? Because then we're getting more people out there. Brandon, bring it home. Wrap it up.
I would say that how I would wrap this whole thing up is that we are extremely lucky to be at a point in the history of society. We're extremely lucky to be alive at this point, because how many times in the history of civilization has the medium of value exchange transitioned into something different? Like it used to be, sticks and stones or whatever it was, and then it was, bartering, and then it was, we had coins, and then you had coins and bills and things like that. I think the fact that we're lucky enough to be alive right now and talking about this new paradigm shift of medium of a value exchange, the medium of value exchange, it doesn't happen that often in the history of civilization. And so I think that, us having the ability to talk about it, educate ourselves about it, and get in on it if we want to, that's a very rare opportunity. And so I think this isn't just like another thing. I think we're witnessing something that's going to be super historic when it's all said and done. I think, Raul, like you said, it has the ability to change a lot of things societally, and I think we're just lucky that we're in a position to actually witness one of the few times that a paradigm shift like this has occurred. So I'd encourage everyone to just kind of, at least be aware of these things that are occurring, because, like I said, I mean, you could probably count on single hand the number of times that the medium of the value exchange has occurred. So super interesting.
There you go. That's it, guys. Guys, thanks for doing this. This is a dense one, so I know it's like to get through, but again, I think it's going to drive some value for some people. So,
Brandon, where can we find you? Let's get some information. If anybody wanted to reach out to you or try to follow you in your journey with cryptocurrency, where can we find you?
So I'm kind of low key on the radar. I mean, I do have an email.
Yeah.
I mean, I don't know how many people would want to reach out via email, but it's Brandon@ripples.com. Not Ripple Labs, not like that one. They took our name. But yeah. So I hear you on that one. I'm not a fan of them taking our name, but and we should have got that on Ledger, because then we could have verified that claim that we took the URL first. But yeah, no, I would say email, just Brandon@ripples.com. I'm pretty, open. I mean, there's the email bit of it. I'm not really on social media too much. So I don't know, do you guys have any ideas? Any suggestions?
No, the email's fine. I'll include the email in the description on the YouTube page. So if you guys want to get in touch with Brandon, I'll have his email there. If you have any questions about crypto, about the projects he's working on, feel free to send him an email, and he'll hopefully respond, and you guys can.
Let's see how big our reach is, and let's see how get people working with Brandon to help him with the cause as well.
Okay. True.
All right, guys. Well, we'll end it there. Thank you so much again, Brandon, for doing this. Karn, as always, appreciate you being on here, and we'll do the next one in about a year. We'll see what Bitcoin's at in 1 year from now.
Should be interesting.
Yeah.
Cool. All right, guys.
Sounds good. Okay. All right, guys.
Thank you very much, guys.
Yeah. Take it easy.
Bye.